Hello everybody. Today we are going to understand the second method of GDP calculation, which is income approach. Let's look again at the circular flow of income. And we can see easily the components of GDP. Actually looking this below part of this picture, starting with households. Households supply land, labor, capital, and entrepreneurship to the market of factors of production, which creates actually expenditure for corporates and government. And households, following now the black arrows, receive back wages, rent, interest payment, and profit. Actually, the sum of these returns from corporates and governments to the households is the GDP, the income. So, according to the following approach, GDP is equal to incomes earned by household in a nation during a year. The source of incomes in an economy that create revenue for households are, as we said, land, labor, capital, and entrepreneurship. Let's to understand each of them. What is land? You give your land or any kind of buildings or room or any kind of capital, let's say, that you use for rent and receive income, so it is called rental income. The second one is labor. Households can earn money doing mental or intellectual work, so they sell their labor and they receive wages. The another source of income is capital. Households usually save some percentage of their income in a bank in form of deposit. Banks use this money to create more money. It means banks give loans to businesses which invest in their capital, and these businesses pay back to bank in interest rate, so the banks receive enough money to pay back to households for their deposit. In this way households receive interest rate against their savings, and it is called interest payment. And the last source of income for households is entrepreneurship. Entrepreneurs are those households that are doing their own businesses, creating wealth in a society, or in other words, they add values and create production. So they make profit through doing businesses. Looking at the circular flow of income, we can see, looking again this part, we can see households provide land, labor, capital in order to create production through firms and government, and as returns households get either wage, rent, or profit. So this is the logic of income approach of GDP calculation, which can be written in the following way. Here is the formula. GDP is equal to rent plus wages plus interest payment and plus profit. We can summarize that GDP is a flow. Being a flow, GDP does not measure the total wealth. Please pay attention, this is a very important point, that GDP does not measure the total wealth of a country or a nation, but it measures the income of a country. Any money earned by household automatically are spent by household. Therefore, the income earned is the income spent. And we can say the income is equal to the expenditure. This was the illustration of income approach of GDP calculation. This is the whole logic. Thanks for watching.